Today, we're going to go over 5 mistakes that you're making while trading the supply and demand trading strategy that's stopping you from making money consistently. I've been trading this strategy for over 8 years and helping traders become consistently profitable in the Moneyball trading program. And when I do a one on one review with them, they all have these 5 mistakes and I get them to correct it, and then the results change overnight. So I'm going to break down the 5 mistakes that's stopping you from making money consistently and how to fix that. And then at the end, I'm going to give you a free ebook on the whole supply and demand trading strategy. As always, I appreciate if you guys like the video, subscribe, and you guys can always message me on social media at Moneyball Austin, and I can talk to you there. Now that the dramatic intro is out of the way, let's talk about the 5 common mistakes. I must say, those intros are very tough as a YouTuber making videos. 5 mistakes that you're making. Like, oh my gosh. 5 mistakes that you're making while cooking hash browns in the morning. Like, I don't know. Okay, so number 1 is what we're going to talk about. And hands down, this is one of the ones that I instantly tell my traders in the private group, don't ever do. When it comes to your entry time frame, we're going to look at stats here. When it comes to your entry time frame while trading supply and demand, do not ever trade at continuation patterns. What do I mean by that? Well, let me bring you guys a picture. The 4 patterns that we trade are up here. The 2 on the left, the rally-based drop, and the one on the bottom, the drop-based rally. These patterns work a lot better than the 2 continuation patterns, which are known as drop-based drop over here on the right and here bottom right, and the rally-based rally. Okay, so when it comes to your entry time frame, I strongly recommend only trading at these patterns. We're going to get into the nitty gritty of this. I'm looking at, these are stats that I have throughout years and years. And this is something I did many years ago when I was reviewing. And I was like, hey, you know what? This is why journaling is important, so you can go back and review. I was like, hey, is there a difference between my patterns if it's a drop-based rally or a rally-based drop versus a continuation pattern? And I look at this. I know you guys can't probably see, but statistically, time and time again, when I get other people to review, they all come back to me saying those patterns work a lot better than the continuation patterns. There was actually a trader that reached out to me. He's watched a lot of my videos. He did a review and he got 33% win rate with a 2-to-1 reward to risk. Pretty much break even. Okay. And so I asked him, did he journal his trades? If so, send me a Google document. He sent me his Google document. I reviewed his trades and I said, hey, you need to watch this video that I just uploaded and do this back test. I will actually pop that on the screen and have it in the link below. And he made these adjustments to the quality of his zones, because this is one of the things that he was doing. He was trading at these continuation patterns again and again and again. And I did a review, and his overall results from a 33% win rate from just making this one change went to a 70% win rate. This is why journaling is very important as well. It's actually one of the mistakes that we're going to talk about. Because if you don't journal your trades, I really can't help you. I can't spot where you are potentially going wrong. And so this is what I do with all the traders in the program. I sit down with them. I give them a bunch of stuff to review once they have 30, 40 trades. And I look at all their trades and mark out what's good, what's bad. And then we break down to see what is the good setup that you're identifying versus the poor setup. And so right away when he made these adjustments, 2-to-1, he was finding a 70% win rate. And then he broke it down more. Hey, how's my trending trades versus my counter trend trades? Well, his trending trades obviously work a lot better. And this is actually something I have in my stats here when I review, is I'm looking at it. Trending trades, 68% winner versus counter trend, 40% winner. So I just completely remove counter trend trading from my style of trading because it doesn't work as well for me. Okay, and then I start reviewing, well, what is my drop-based rally / rally-based drop patterns with trading with the trend. And it's like, oh my gosh, it goes up to a 75% win rate versus if I was trading counter trend with those patterns, it goes to a 55%. So altogether, I just remove counter trend and remove those continuation patterns out of my style of trading. And so that's my first tip, is to stick to drop-based rallies and rally-based drops. And so if we look here on the chart, for you guys that don't know, I will have videos on how to identify zones and draw zones. I have a whole tips playlist on my YouTube channel to check out. And this right here would be a rally-based drop up here. Continuation patterns would be over here, and then ideally we want to be trading these reversal patterns, okay? Those are the type of zones that we want to trade. So that brings me to my first point. Number two, the quality of the zone. I've uploaded many videos talking about. I will pop them on the screen and also have them in the description below for you guys to check out. But we got to talk about the quality, and when it comes to a quality aspect, there's full videos on this. Every time and time again, when I get people to review, the strength of the imbalance is important. This is why I got him to review. And look, these are his stats. High quality zone. Now, I understand, this is only 30 trades, but it's a night and day difference that he made from his first back test to his second back test. High quality zones, 11 winners and 4 losers, 75% win rate. And then it goes down when he's trading medium quality, and then when he's trading poor quality, he had a 60% win rate. Okay, and so how do you identify these quality zones? Well, let me quickly explain. We don't just simply trade at every zone. We want to make sure that these zones do certain things and qualify to be a good zone. So number one, I'm going to mention this here. Number one, strength of the imbalance. The whole concept of supply and demand is to identify where the big money is buying and selling at, which leave these massive footprints, these big imbalances on the charts. So that's what every zone is going to have in common. So with this supply zone, this is a key point that I'm making here. Quality. Every zone will have these 3 things. Number one, 2-to-1 imbalance. The imbalance is going to be 2 times the size of the base. So this leg out here, this big red candle down, is over 2 times the size of this base up here. That's what we want to be trading at. Those are the type of zones. So that's the first thing. It needs to have a strong quality imbalance. Number 2, it needs to either remove an opposing zone or break trend lines. So in this case, this big move to the downside removed demand over here to the left and over here to the left. So it's removed an opposing zone and it has a strong imbalance. Now there's a third one which this zone didn't actually hit, which is breaking trend line, breaking momentum lines. But hands down, most important is 2-to-1 imbalance and removes an opposing zone. And obviously, rally-based drop or drop-based rally. If we look at this zone over here, you might be thinking, oh, well, that's a good zone. I agree. It's got a good imbalance, this demand zone. It's a continuation pattern. It's got a really good imbalance, but it never removed an opposing zone. It never broke trend lines, so I would not use it as a 4-hour demand zone. I would not trade at it, okay? So these are things that I require for these zones to do when it comes to the quality. We go down to the 1-hour time frame. We could identify this as a strong quality 1-hour supply zone, strong imbalance to the downside. The imbalance candlestick is the first 1 to 3 candlesticks. And if it doesn't go 2-to-1 within that time period, I am not interested in trading it. So quick recap, trade drop-based rally / rally-based drops on entry time frame. Number 2, 2-to-1 imbalance plus remove opposing zone or break momentum line. Okay? Hands down, those are the 2 mistakes. Those are the things that you got to start doing. Let's talk about number 3. Okay, cool. Let's move on to the third point. This is going really well. And this is a little nuance about the strategy that I'm about to talk about. And this is something that I've came up with since reviewing all my trades years and years ago. And that is arrival. How does price come back into my zone? And you'll notice if you ever look at my trades, I have prices coming straight back into my zone. And I have a picture explaining to this. When I get people to review, this is one of the things I get them to review, is I want to see how prices arrive. Is it cutting my profit margin, or does it have a nice clean arrival with prices coming straight into it? So here, I'm going to actually draw on this photo. This is going really well right now. So So I set up here, here's a quick photo with a clean arrival versus poor arrival. It looks like most traders will find when they review that clean arrivals work better than poor arrivals because price does not need to remove an opposing zone that's cutting the profit margin. This is something that I would tell traders to review after 20 to 40 trades. And when I do the review, I've done it, hundreds of times with people. 90% of the time they come back with me with the same stats, okay? This is what I mean. I got the picture here. I am going to blow it up. And so when prices, let's just say right here, this demand zone bottom left that this person is trading at, strong in balance, removed opposing zones, broke momentum lines. What do you know? It has that in common. Look how prices come back into it right here. This is where we're waiting for the entry to come into it, right? Prices coming straight back into it. Versus here on the right, prices come straight back into it, but it's offering like a one-to-one profit margin. Now, that's probably not good enough for this trader, but prices come back down, base here, and then drop. So this is the next area that I'm a little bit concerned about. So when it starts basing out for 2, 3 candlesticks, that's when I remove my order and I'm no longer interested in taking a trade like that. Okay. Actually, a trade that I like right now is oil. Here is a quality zone. Recapping top three. Rally base drop. Let me remove this. We're actually inside higher time frame supply. Rally base drop supply. Reversal pattern. We talked about that. Mistake number one. Mistake number two. Strong imbalance. The imbalance here for the first 2 candlesticks went over 2 to 1 within the first 3 candlesticks. So it went over 2 to 1. It also broke momentum line and it's removed a couple demand zones. So that declares a good quality zone. And plus, prices are coming straight back up into my zone like this. It's not rallying up, then basing, then going up. It's going straight back up into it. That's what I like. If you have your trades journaled, reviewed, that's something I do recommend reviewing and seeing if there's any significant difference. Okay? Let's talk about number 4. Mistake number 4. That is going to be multiple time frame analysis. You got to consider what prices are doing on the higher time frame. I get this question asked a lot. What's the best time frame sequence? What higher time frame should I use if I'm going to use this type of trading? I will actually pop it on the screen for you guys. You can take a picture, send it to your mother, send it to your friends, tattoo it, do whatever you got to do. But those are the time frame sequences that I recommend using because it is important to understand the different types of trading that you are doing. If you're interested in taking a 1 minute or 5 minute trade on an entry time frame zone, then you don't really care what prices are doing on the weekly or monthly chart. You're more concerned about where prices or what prices are doing on the smaller time frame, like the 1 hour or 4 hour, because you're only going to be in a type of trade like that for a short period of time. So you're only interested in what's happening now. Versus if you're swing trading, okay, then you might want to look at the weekly and the monthly chart because you're projected to be in that trade for at least a couple days to a couple weeks to a couple months, right? So it's different time frames that you have to consider. There is a analysis on USD CAD, and it doesn't have to be, supply and demand. It could be a bunch of other stuff. It could be support and resistance or other technical analysis or chart patterns. There's no problem. So with USD CAD on a 4 hour time frame, if we scroll all the way out, I kind of have this resistance line that was support and it broke it and held as resistance. So we're kind of testing that area of resistance, but it's also a 4 hour supply zone. 4 hour supply, rally base drop supply zone that we talked about first mistake. Strong imbalances. Okay, mistake number 2, strong imbalances. That's what we want to see. That's why I like that area for selling opportunities. You have an understanding of the trend, what prices are doing on the higher time frame. And so it's extremely important. As we did a review, even this guy, his trending trades performed better than his counter trend trades, right? And even when I look at these stats here on my notebooks, I can quickly look at them. Time and time again, I'm looking at this actually right here. Clean arrivals, 65% win rate. Poor arrivals, 38% win rate. Oh, goosh. Great googly moogly, Yeah, that's why you got to take pictures and review, guys. Right here, trending markets, 70%, counter trend, 40%. What do? Poof, throw out counter trend altogether. All right. So this is why it's important to understand what prices are doing on the higher time frame. So mistake number 5, and hands down the best for last. Because everything that we've talked about here in this video, nothing was possible. Nothing was possible if we didn't take pictures of our trade reviews. I'm talking about having a trading plan. I'm talking about journaling your trades. I'm talking about back testing. Let's quickly talk about for 30 seconds trading plan, trading strategy. You got to have a trading plan and trading strategy. So what I recommend is having a very mechanical way of trading that's very rules based. This will help you eliminate any emotion side of your trading because you got to have these 5 checks in order for you to take a trade. You don't have it? Okay, no trade. And this is why I have the 30-day trading plan or the 30-day trading challenge. That's absolutely amazing. I've heard great reviews from you guys. I will pop it on the screen, and then I have that also in the description below for you guys to start that challenge now, start of the new month. I think it's a great time to get that challenge started for yourself. So that's the first thing when it comes to mistake number 5. The second thing is the importance of back testing, like that you've seen this person doing, back testing and journaling and reviewing. Back testing is going to help build confidence in your trading strategy because you can take 100 trades within a day to 2 days to 3 days. Okay, it doesn't take that long. Versus if you're going to get 100 good quality trades in live markets or demo markets, it's going to take you weeks, months to get that. Okay, so back testing will quickly allow you to see how the strategy works. If you need to make adjustments, you can't just judge a trading strategy off of one back test. That's why he came to me and he said, I have a 33% win rate. Boom, make these adjustments, comes back to me, boom, has I don't know, a 70% win rate or something like that. He made the adjustments. I helped him. That's great. That's what I'm trying to do is help build consistently profitable traders. So the last part of mistake number 5 is going to be the review and journaling process slash adjust. In this whole video that you've seen me do, I keep bringing up my little notepads and my notes that are on the ground now and this guy's back test. None of this is possible if I don't journal the trades and review. There's so many things. How do I trade in the first 30 minutes versus after the first 30 minutes of the market open? That's why journaling your trades is important. You can figure that out. How's my trending trades versus my counter trend trades? How about if I, instead of taking profit at 2 to 1, I get out at 5 to 1? How does that affect my win loss percentage? Do I make more? Do I lose more? Journaling your trades, guys. That's just one thing that you have to do. You have to do it. You have to, guys. It drives me crazy when people don't do it. We've been banging out some really good mistakes so far, and that's okay because everybody makes mistakes. Everybody has those days. Hannah Montana song. Don't forget it. Everybody has those days. Everybody makes mistakes. Is that Hannah Montana? I don't know. That was a show that I grew up watching. Hannah Montana. Yeah, she took a left turn. Eh? I came in like a wrecking ball. But what's important is you journal, review, adjust. Journal, review, adjust. It's a never ending cycle for every trader. There's no naked girl at the end of the tunnel. So you might be wondering, what about this supply and demand ebook? I would love to share that with you guys. You guys can actually get that. That will be in the link below to moneyballtrading.com. And you guys can get your free ebook on the whole supply and demand methodology. On, in fact, everything that I mentioned there will be in that ebook and a bunch more other bonuses. So I appreciate if you guys check that out. You guys can get that ebook and I will send it over to your email. I appreciate if you guys like the video, subscribe, and I will see you guys in the next one. Cheers. Bye-bye.